Hello, traders. I hope you are all well during these difficult times, and keeping safe indoors and presumably trading if you're watching this. I'm just wanted to do a video related to the markets, of course, and to the difficult days that we have with quite a lot of volatility, obviously this can make things fairly tricky to trade. But also as there is a lot of volatility, there is also a lot of there are a lot of opportunities to make money. So markets are unpredictable. Markets are, it's really a roller coaster. So I just wanted to take the last week as an example, and more precisely, last Friday, last day of the week. Unlike what it says on my chart, this was not Thursday, but this was Friday. We are looking at the 6E June contract, so that's the euro-dollar contract. Obviously, you would expect that the euro-dollar would be really sensitive to whatever happened in the Eurozone area, as well as anything related to the US dollar and the US, generally speaking. And it does. But it doesn't always do as one would expect it will. So, which makes things quite difficult. I mean, it doesn't necessarily at best of times, and this is why it's always good to concentrate and focus on a given market or assets or instruments that you do regularly and that you know, and for which you know the all the main stats, the average range, the average volatility, the various times of when volume occurs and volatility and momentum and so on. So I think it's always very good to concentrate on a few assets, not necessarily one. You can do two, you can do three, you can do four, as long as you sort of understand a little bit of habits, so to speak, of the assets you're looking at, and more to the point, the habits of how the participants of who trade the given assets react according to various situations and the news and economic announcements and unpredictable events and so on. Of course, by definition, unpredictable is unpredictable, but it's when you look at the market map and when you look at what I call technical, nothing to do with technical analysis, but when you look at technical key points on a chart, you do realize that although things can happen at random times for no real reason, they never happen at random places. And anyway, that's the whole beauty of order flow, generally speaking. I would really define my trading as certainly order flow, 100% order flow based, but if I was to define a style, I would probably very much somebody who does probably position trading is the nearer thing if you wanted to give it a name. Although position trading doesn't obviously has to be over several weeks or months or whatever. It can be something you do in the same day or over a couple of sessions, a couple of 3 or 4. It doesn't matter. Principle remains the same. Now, if you take out examples of what we're looking at here, for those who wouldn't know, we're just looking at the TPO, so the market profile on the left side of each day. So that's a day, that's a day, that's the last day. Here just broken down in 30 minutes period, so you can sort of expand it. But effectively, we're looking at the volume profile to the left, and to summarize it. A lot, for those who don't know what it is, it's just the amount of time that we spent on each price level, and it's broken down within 30 minutes period. So if I look at here, I've got a shape of my time, price, opportunity profile, and here I've got the shape of my volume profile. In this case, you can see that the area where we spend the most time and the most volume was exchange is fairly similar, not too far apart. In light blue here is the volume profile. This is where we spend volume area, where we spend the most volume. Where we exchange and executed the most volume, and this is where we spend the most time. Now, if I have to take a look at it on a sort of broken down or expanded way, I've got each letters, obviously, which is each 30 minutes session, broken down by 30 minutes, so it shows you how the market has moved throughout the day. Now, as I said, the technical references that we may have if we didn't have any of that, and if we were to look at a random candle chart with no other indication, so here is just simply a 30 minutes candle chart, and if you're looking at exactly the same thing, okay, so that's Friday, okay, overall starts here, finishes here. So if you look at a session on Friday, well, if you just look at it like that, you obviously can see that, ignore the engulfing bars and the volume bars and all the rest of it, and the cumulative delta, and ignore all of this. Just look at the candle charts, and what we can see fairly easily is that, you know, we sort of open at a certain level on Friday, so we were here, and we, you know, have a few, as the market opens, session open, we sort of go up a little bit, and then we sort of consolidate, and then we go down quite aggressively, and then we go all the way down to a certain point, okay, and when we reach that point, we go back up quite aggressively as well, and then obviously you have here the low of the day and the high of the day, and then we sort of, you know, I guess consolidate a little bit at the top, spend time at the top, go back down, go back up, go back down, and all finish the sort of, you know, consolidation within the last few hours of the session. Now, great. So if I look at that, let's assume I hear the news. It was Friday, and what happened on Friday or not, and were there any sort of, you know, news or economic news or announcement? There was certainly some news, and pretty much always around the same things. But if I look very quickly at what happened in terms of the economic calendar, you know, not an awful lot, I guess, happened on Friday, and you know, but that's pretty much how you would sort of, you know, take a look at it. Let me just go back to last week, and if I look back at last week, what happened on Friday? We had, you know, US President spoke fairly late on that day, but that's it. There was no, you know, obviously on Thursday we had the sort of unemployment claim, so the US unemployment figure, which you know, is always something that makes the market move. But then again, all of this is very predictable, and then again, we can assume that a lot of this is already priced in. And you know, all that to say, you look at a chart and it goes up, it goes down, and look at a naked chart, and even though this is quite not naked, I've got the different sort of Fibonacci bands, and I've got my my VWAP, and I've got the cumulative delta here, and you can see as we start at 11ish, when we start having this big up move, you can see that there's a lot of much more you know, aggressive sellers within this up move, so you can start drawing some conclusions and say, well, we're going, you know, the sort of you know, cumulative delta, so is going down, so there's more effectively people coming and selling with market orders, and more and more and more, so there's a real divergence. We're going up here, but there's more sellers. Effectively, it's not more sellers, there's never more sellers, but you know, it's more aggressive sellers. And in spite of having more aggressive sellers, we keep going up. So there's clearly an absorption, first of all these aggressive market orders. But also this could be like people taking profit as we move up, and that's one thing. Or it could also be an indication of institutionals, because of course we don't know. We just know that we've got aggressive, from this chart we don't know. We've got aggressive, effectively sellers, people selling at market, and we can see here, if we want to add to it, we've got volume, at least compared to the rest of the day. So it's quite a high volume on this sort of few bars here. So all of this together really gives you an idea. I've got volume, I've got aggressive sellers, and yet the price is going up. And as the prices are going up, and my more aggressive sellers we are, the more we're going up. There's clearly some people taking profit in their position as the market goes up. And obviously the opposite of their long orders is going to be short orders and not market. But you could also combine with that clearly institutional or people with more size who need to ensure there is enough liquidity to sell. In that case, would need to do so in an up move. Obviously, the more up move you have here, because this is obviously showing us the result of these market orders, so the exchange of people and the limit orders, so people who are, if prices go up, effectively the absorption on the upside was quite consequent, because we had more aggressive sellers and they were all absorbed. Even if you ignore the reason why, and the reason, as I said, could be taking profit, or people with size waiting to get liquidity to get selling. So a combination of all of that gives you this real divergence. Normally, by the way, this I would expect, and again, when I say I would expect, I wouldn't take a trade based on that, but this is something I would watch. I would expect that, we've had a number of people, obviously, as the market went up, we had to have a number of sellers in here. Clearly, the sort of limit orders and aggressive as well market orders on the long side were stronger overall, and this is why we went up there, and then we sort of consolidated all the way from the top of the day. But overall, I would probably expect, and I could be completely wrong, of course, and that's why you never want to take a side but only build scenarios, but I would expect it could well be a down day following that sort of big divergence. Anyway, all this chart shows us is fairly limited to that sort of analysis I've just run very quickly, by the way. Okay, now if I start looking at my market profile and volume profile on the same chart, this is the same thing on a monthly basis. If I go back to my daily TPO versus volume profile, I get another layer of information here. So suddenly I can see what happened every half hour, how many TPO we printed. I can see how much volume was executed at each price level. And of course, I've got additional information coming from these profiles. And I can see that, well, a number of things. I can see where the low volume nodes were in the previous days and how they're projected forward. And I can expect that they might be original rejection or not, or we might go through them and go to the next high level of volume. And I can also expect them to be filled in. So it's always good to project forward these areas. I can do the same with the top and bottom of volume value areas, the same for the point of control, the same for the single prints, the same for the buying tails, the selling tails on the TPO side, and the TPOC, so the point in level price at which we spend the most of the time on the day, etc., etc. And all of this can be projected forward and will give us will give us references. So this is why I call this the market map, because this, and also it's not this on its own, it's combined to the previous chart we looked at, will give me information as to where the market could possibly go to, and that could help me establish scenarios. Now, again, we're looking again at the same thing we were looking at, same thing as this 30 minutes candles I was showing you, except here it's letters. But you can see, as we said, we went up within the just almost of last day, bottom of last day value area. We opened in here, where we closed in here, so there's a bit of a gap here, opening gap, and we went up, and then we went all the way down, and then 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 down, all the way to a specific point in that case, which happens to be this yellow line, which is the important one, which was a single print. And a single print is a single print from, as you can tell, from the previous Monday, so the Monday the week before, which had been rejected. You can see there's a massive here, there's one here, there's one here. We've got a lot of buying tails, a lot of them, everywhere, which effectively, and single prints as well, okay. And you can see that this creates a lot of references, lots of reference points, which we can project forward. I tend to combine them all together. This is why you see this big, I suppose you have one here, have one here, have one here, have one here, have one here. I just combine them all in one big one because I'm used to it, and that's the way I like to do it. And I've got this whole area where I know that, hey, if the market comes back here, we could well effectively go back, to cut a long story short, all the way down here to 107.87.5. The color obviously doesn't speak to you, but speaks to me. I don't know, this purple sort of dash line here tells me we've got unfinished business here as well. So all the thing is confluences of various indications, and again, it can happen on Monday, tomorrow, or it could happen in Monday, Friday, Wednesday, whatever, in 6 months' time. We don't know that part. But at least I know that I've got an area, I've got a map, and if we go down, I could expect it to go to various subsequent down levels. And exactly the same thing applies to if we were to go up. This is, well, what could happen. So I could easily project this selling tail here from last week, project it forward. That's something I could be watching if we go back up to, this level here. And I could, although it's already highlighted, but we've worked on it on the last session, so I would highlight it again. But I would probably say, hey, I've got another projection I would like to do here. And I would probably say, hey, I've got this selling tail here. The TPO print, by the way, was not taken out. And that's what my initial point was. This single print from the Monday the week before last was not taken out, and it's still here. Hasn't been crossed, if you like. We bounced on it. So while you may have, and that was not the case of Friday as we checked, but while you may have economic announcement, while you may have some news, while you may have all kind of things happening, you can see this. We didn't stop here for no reason. I'm not going to get through why single print, that would be a whole thing altogether, how it's created and what it means, blah blah blah. But the point being, it's an important point. There could even be a confluence of several points here, and in that case here, we sort of bounce back on its TPO print. Now, it was, as you can see, it's a big move down originally. And it happens at, and as a beauty of it, we've got a time. It happens at 11 a.m. on Friday. So, while we were here, we could have gone all the way to the end of this massive, and it's huge selling tail here. Buying tail here. And we could have gone all the way down here fairly easily. Especially as it does, there is confluence with other areas and other places and I'm not going to dwell into it too much because it's going to last forever. But we could have gone all the way equally to 108, which 108.08 in that case, which for a lot of reason is would have been a nice place to stop at. Or we could have gone down all the way down to the level below here, or we could have gone down all the way to below here, or you could have gone to all the way down to the low or the bottom or low of that session here, back on the whenever that was, the 5th of April, or go all the way down to this unfinished business zone at 107.88, as I was pointing out earlier, etc., etc. But point is, for whatever reason, at 11 a.m. we stopped, we reversed. I was in a short, okay, I'm not going to show this to you now. I didn't take the short from all above here because I started probably, I think, just after it's probably between 8 and 9, I can't remember, which is, after once the UK session has sort of started. So I can't remember which point, but I sort of probably got it around here. I got this move, which wasn't bad. And then we turned back at 11, as we can see, and we never came back all the way down here. And the point of control was probably here originally during the day, and it moved up here, and we spent most of the time here. We pushed all the way here, at which stage we thought, again, inversely, hey, we could go all the way here now. And if we go all the way here, we could even go all the way to this, higher here, or all the way to this, the top of this previous profile here, or session, etc., etc. So it's always really what I'm trying to get at is we've got the map, we know where we could go to, we know the market doesn't stop at random places when we start having those places displayed on the charts, unlike what we see when we look at a candle chart. But what we don't know is when we don't know is how, and when we don't know, not always know in that case, is why. So why on Friday at 11 a.m. while we were going all the way down, and again I didn't take the trade from all the way down here, but pretty much it nonetheless started here at 6 a.m. pretty much, going down from 108.88 all the way down to effectively this 108.26, which is 60 points. Which is 60 points, which, from 108.80 to 108.28 is 60 points, as I said, and it's, well, more or less. And, not too shabby of a move, especially like that, in the whole morning, half hour after half hour, quite a lot of momentum, quite aggressive, quite strong down, sort of volume and volatility. Now, why at 11 o'clock? Well, the honest answer is, I looked at it on Friday, as I said, I traded some of it. I don't know. I still don't know why. There was no real reason. There was some sort of vague chat and conversation and umpteenth news about coronavirus and whether there was going to be a vaccine coming and blah, blah, blah. It's all people trading based on things we don't really know precisely about or of. It's all vague, it's all guesses, it's all something that suddenly turns one into a positive, takes something into, turns into something positive, and okay, that's positive for the Eurozone, and we're testing vaccines here in the UK and probably many places around the world too, and this is positive and this and that. When 4 or 5 hours later, all we did was really being down. It was really saying, hey, there's no necessarily any good news for the US, because if you look on a Thursday here, we have, a day which is pretty much a down day, as far as I can remember. Okay, so we had a bounce back again on the specific level, so we, in that case here, we go past one. We break through one single print, we break through a single print, and then a few TPOs, a few letters down below, we bounce back, and we stay back down here. We don't really come back up. So point being, this was just, we had a bad number for, again, we had a bad number for the US, which was admittedly priced in because it had been forecast and it was just obvious that it would be. But we had a bad number in terms of US unemployment, which pushed down, pushed down the euro effectively, because we're looking at euro-dollar futures here. So why something negative for the US has a negative impact on the euro as opposed to have a negative impact on the US? Well, we could sort of come here and think about various reasons, because the US dollar remains safe haven and etc., and people fly to more secure assets when there are some bad news. So although the bad news is related to the US, this is still seen as a strong currency, with a strong country and a strong central bank ready to inject some cash in and so on. Whatever. I mean, we could spend hours like guessing and making our own analysis, as all this sort of analysis that we see from various sides, which sort of call some moves and say, hey, everybody's down, it's bearish, everybody's bullish, and we could go all the way to here because of this, because of that. Well, I try to avoid all of this, because once you start reading and getting influenced and reading some news and everybody's got a different opinion, I try not to have an opinion. Okay, and the point being, really, so why did it suddenly go back up at 11 o'clock on Friday? I have no idea. Nobody really knows. It probably was some news. Hey, some vaccine talk, vague thing could happen and start being tested next week, and as early as September in the UK have vaccination, blah blah. I don't know. Do we know? Some people might better than we do, but the point is, if you're behind your computer trying to trade your own money and thinking, well, that's not too bad, in fact, to be trading from home, in the sense that I don't need to rely on customers, I don't need to be out there and rely on anybody else to do business. I can do that on my own and still earn enough money and a living. And yes, it's quite interesting to trade, and it's quite a good thing I should really take on board and try to master and try to understand, because there's something I can do. I got the freedom to do what I do when I want, how I want, no boss. I do that on my own, how I want it. All right. So if you're anything like that, which I am, then you're also probably don't have the insider news as to what's really happening in the within the medical world, and really understand who's doing which vaccine and who does what, who's done what, how and why. So all you see is this market reversing at 11 o'clock on a Friday, when you might have been like me in a nice down trade. And why would you get out and avoid? I said to you, I got in here, I can't remember, it's 8ish, that's for sure, in the morning. I can't remember which level. I unfortunately didn't take the whole move, but I still, did take a nice little profit here. But why, after what point, at what point, and why do you decide that this single print here was a real reverse, which was going to make us reverse all the way, and created the high of the day? High of the day, remember, so far we're just here, all right? So we're above that high, and above that high, and above that high, and above that high, all right? So how could we predict this? And effectively, if we were, even if we had taken the whole down move here from the very, very top, which is possible, at 6 a.m., it would have been a good idea not to give back all the profit we made, right? In this nice 60-point move, as we pointed earlier, and maybe lose some more. How could we avoid this? Well, again, if I look at this, I get information on the map onto where we could go to and build my scenarios. Now, what I want to do, let's imagine we don't know. It's 11 a.m. Okay, so we don't know. We're effectively, I'm trying to make this, we're here. So, we don't know all this thing here. Just trying to hide this is if my screen wants to move a little bit, which is not at all what I wanted to do. It's very annoying. Let's just do that. Okay. So we are here. I could do a whole replay, but you'll get the idea here. Obviously, we can't see it now because it's blue and green, and my colors are not fantastic on green. But anyway, we're here. All right, we don't know. Let's assume we don't know this whole area here. We're just here. We were in a down trade, either all the way to the top or not. Some stage here, it's great, and then hey, there's a single print. We all know because we know this market well, and we know how the market tends to react to single prints, and we know that without getting the why, how, blah blah blah, we just know that when we come to a big ledge as we have here, we'll have an initial reaction. It's very likely. When we come to a single print, as we have one here, we'll come to reaction. Reaction usually is to bounce on it and then come back to it and then break it and then maybe bounce back and sort of fill in that, you know, single, sorry, it's not a single, fill in that buying tail, i.e. low volume here because we're buying, so like all these buyers acting here, boom, 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 creating volume, and, you know, and you can see this selling tail quite, buying tail quite well here. God, it's getting painful now. But yeah, let's assume we don't know all of that. So how could we have known that it is, even if you don't know it's going to go all the way up, of course, at that time, but I don't want to give away, I don't want to give back all the profits I've made. I want to get out, and this is not going to be a simple, you know, a bounce back to come back down further and harder. How do I know that at that time? Well, again, this is when order flow comes in handy, because in addition to this, you know, delta, we were looking at cumulative delta and volume and the references that we have on a weekly volume profile and market profile and daily and monthly. I also have another tool, and of course we have other tools as well beyond that, but this is where I'm going to stop in today. We also have another tool, which is the footprint. So, footprint. I am going back, this is Friday day, so here's telling Friday, you that it's Friday properly. And I want to go back to Friday 11, which is the low of the day, as we've gathered. And let's see what we have here. So what do we have here? See this, first of all, I'm using something called emoji trading indicators, which so this is normal Sierra chart, obviously, setup and configuration, all of this. But all these areas that you see, it's all the flow projected areas in terms of liquidity, in terms of where there was momentum, where there was absorption, where there was supply and demand, effectively. And this is telling me here, it's green, and you know, it's the way I try to put it, but it's projected forward. It's telling me that we're getting here into this area where we will have had, you know, supply. You can see these green areas, so buyers. It's not very hard to comprehend the sense that we were in a selling tail. Remember this TPO print here, and we saw the big selling tail for the days before. So yes, that would have been getting at the bottom of a day profile, and you know, stops or exit positions, if you like, from people who were short coming in, so i.e. long orders at market, and also triggering also some more buyers in there because it was a low of the day and it's a buying tail. So unsurprisingly, we've got this, and you can expect this at any bottom of any profile, by the way. So this is not, you know. Now, what indication do we have here? So again, we don't know. Let's push this a little bit, and we say we don't know. Okay, we don't know, and here it's easier in a way to say that we don't know. Okay, so it's 11 here. I'm in my trade. I'm down from whatever level. I'm making money. It's fun. It's great. It's you know, it's all going down well. Okay, so let me just try to push it a little bit, if I may. Are we in there? Yet. Yeah, not quite. Okay. This is a pain. And the thing. Let me just try to get it here. Okay, so we don't know what's there. There we go. Okay. Okay, we don't know. That's where we are. It's 11 o'clock. I'm in this trade. I'm short. This is fantastic. Now, any indications here? So we get to a single print. So we know that very often on a single print, and we don't see that here. I could have projected it here, but we don't see it here. We see it on the other volume profile, market profile we saw. So I expect it to bounce back. Okay, I know that I've got supply. So I've got potential buyers who would be positioned here to buy it. I know we're getting to the lowest because it has kept going back down, and further down. So third reason why the further down we go, and each time we go down further down, there's always a bounce back of an influx of stops, and so responsive buying, but also initiative buying. So new buyers coming in as well. So I expect all of that. Okay, fine. I'm looking at my footprint here. I'm in the footprint, and you can see that the sellers are still here. You've got 25, 19, 37, 22, 56. They're still here as they were here before. There's no huge. And again, think that if we've got 25, 19, 37, 22, 73, 56, that also means that's sellers at market. So market sell orders and market buy orders on the right hand side. That's what the footprint is, nothing else. So if I've got 25, 19, 37, 22, 73, blah, 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 it means on the other side, you have at least 25 limits, who are ready to buy, at least 19 limits who are ready to sell, at least 37 ready to buy, at least 22 is ready to buy, at least 73 are ready to buy, and so on. Okay. So there's obviously another side to that, and that's just obviously what the footprint doesn't show you. So it shows you the market orders, but it's telling me that there's people willing to buy all the way behind this. All right, and obviously that's true here, that's true here, that's true here, that's true here, that's true here. So you're going to tell me, yeah, but it was true everywhere, and it kept going down. Sure, because this was more aggressive. So we ate through all it, and we would probably need to switch to the DOM, which I'm not going to do in this session. It's going to be too high, but that's going to be the part one here, and that's where the DOM, the order book, if you like, the depth of market, is going to come in. So it's going to be the other view I've got on the other screen, which is going to tell me, well, what's happening with the limits. Do we have iceberg orders? Do we have absorption? Or are we just eating through these market orders? Are consuming all the liquidity, i.e., all the resting orders, all the limit orders on the book. So all these guys ready to buy in the book, which you can't see, are being consumed. All their liquidity is being consumed. This is why we keep going down until we stop going down. So when we stop going down, what does it mean? Does it mean that we, as we know, there's an area for this to happen? So we've got a TPO, we've got the previous supply being projected forward. We've got the low of the day. We're getting onto an area with a lot of buying towers. So all of that. Gives us an indication of getting onto a TPO. We should be wary and start looking whether this is going to be validated. We're going to go through and keep going or not, or bounce back. And we've bounced back, quite honestly. Usually there is a move, so to bounce back up and then we go back down. But if that doesn't happen, I think it's just when it's time to. I'm not saying I would necessarily exit as soon as it bounce back, because there's always a bounce back on a TPO, a single print. Sorry, but because of all the rest of it, all the down, lower of the day, all the buying towers, all of this makes me more aware of all of that. All right. So getting here, well, first of all, on the buying side, I don't really see any buyers here. Unsurprisingly, why don't I see everywhere else? I always see buyers. Here I've got 11 buyers, 7 here. There's none actually. Here 8, here 4. Here I don't have. So if I've got the 12, 19, the 14, the 49 given. But that means that on this last print here, so on the single print itself, I have no buyers. And the reason why I have no buyers is because there's probably, nobody willing to sell, at limit. So in the book, resting orders, nobody willing to sell on a single print. There's a lot of people willing to buy, as we can tell, on the resting orders. I'm talking about the ones we don't see again, because we can see that all the way down at here, even on the thing, we keep having these market orders in 25. So you're going to tell me, well, how come there's no limit orders at this 108.27 on the resting orders, and no resting orders, limit orders willing to sell when we have people willing to sell at market? Well, ask yourself this question, why that could be. Well, it could be because these are maybe people taking profit, i.e. exiting positions, or we've reached stops, if you want to call them stops. And these are triggers as well, so you can see there's less here than here. Volume I'm talking about here, 150, 123, 105, 100. So it's always a combination of several things. The momentum is created, and this momentum is created by people being initiative sellers and responsive sellers. So stops and new trades, if you like. But we can see that after a certain level, this stops as we get nearer, or it gets thinner as we get nearer to these single prints, and there's no one willing to buy at market. Okay, and if you no one willing to buy, with limit orders, resting orders. And usually when you place yourself in the book with a limit order, is because you specifically want to buy or to sell at a specific level, and you will only get executed at that level. All right, why on earth would you want to go down and be short on a specific single print level? Well, you wouldn't. And that's probably why these, I'm concluding, are responsive sellers for most of them here, and probably initiative buyers on the other side, but they're not very aggressive because they can't be served. There's no liquidity provided by the resting orders for them to be able to buy aggressively originally. So this is where we are at this stage again, but that's may well change. So we then move on to the next 11:30, and we can see that yes, there has been a pushback. So effectively it's a green candle here, okay? So we can see we bounce back all the way here, boom, 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 boom. So as these guys, there was not on the last level on the TPO print, but on a single print, but as we come back up, we've got sellers in the book in the limit orders, not on the single print itself, but above that there is. And in fact, the more we go back up, the more the greener our candles are, and you can see the greener they are because there's more and more aggressive buyers in there. Obviously, these aggressive buyers at market find limit resting orders, at the ask in the book, obviously, and there's always, these guys as well, people who buy with limit may well want to people who sell at limit or buy at limit, in fact, it doesn't really matter. But in that case, we'll be serving these guys so they can buy it. And that makes the market move back up because they consume the liquidity. Okay, and then we can ask other questions. Why would people want to be short here and in the book, at the ask? Well, maybe they just make money on providing liquidity. Maybe they don't have a directional way of trading. They just pay to provide liquidity, so they don't really care which way it's going. They're going for the way where there is demand, effectively. This is exactly what they're doing here. Or it could be that, we've got somebody with a completely different time frame and they've got limit orders to go short here. Or it could be that it's some orders which have to be obviously executed at several levels because they're working on a weighted average price as opposed to directional price. Because you have to understand that institutions tend to work on a weighted average price. They don't work on it's not a level. It's VWAP. They work with VWAP, and if you want to buy at VWAP, below VWAP, if you want to sell, you do vice versa. But at the end of the day, you want to have the best, average price, and you work on an average price. You can't sell all you have in one place because you would either make a block to the market and absorb all the buyers, and that would seem a bit suspicious, and the market would reverse, and you wouldn't execute the whole order. And equally, even if you come at market, you don't want to come at market with and bash the whole, be too aggressive. You want to slice your orders. So everybody's working. All institutions are working on average and weighted average orders. Now, point being here, we could go on about it and all kind of different scenarios, and but I'm just trying to give you some explanations here, some tracks. So we go back up. You can see there's aggressive buyers, and next 30 minutes, the next 30 minutes again, we go back up again. So at this stage, if you're short, it could be a bounce back, but there's no sign of weakness on the buyer side. You can see that some sellers are stepping back in, but they can't really stop this. Their orders are being absorbed, and we keep going up. So to me at this stage, it would have been, I can't remember where I exited actually. I think it was sort of at the end of this second candle. But it is clearly a sign of a reverse. Don't get me wrong, there's no sign here, obvious sign that it's going to go back all the way up. But this is probably the sign you should, sort of get out of your trade if you've been short. And in fact, if you look at a subsequent sort of, that's the 11:30, it's the 12:30, so 12:30 is still a bar, but it's a bit less. You can see there's more sellers stepping in, trying to reverse it, and they can't. And this one would have been really the, if you've been up all the way and we keep going, having higher high, that sort of thing. You definitely want to exit here and not, watch it. Eat back all your profit for the day, and watch it go back up. Okay, so that's we still don't know why at 11 a.m. By the way, we know why we bounced back on a single print, but we don't know what's pushed this, because there's clearly some injection of momentum and of initiative buying, as well as responsive. But we don't know. But I just I would say we don't care. Because all we care about is we saw signs that there was a reverse and that it was time to exit. I'm just telling you here about a footprint. I'm not a footprint expert and trader, by the way. Some people are much more thorough and detailed with a footprint than I am. But there's another thing you may want to add apart from this thing, because here, if you remember the 11:1, you can see I've got a delta here on the top first line. I've got a negative delta, which is fine. On the second one, again, that's confirmation. It's in green as well. It's this green bar. We see transparent here, but that's the number here, 233. So we're going from negative deltas pretty much. Here we started to have positive deltas, 97, 99. We've got another small, compared to the previous ones, negative. We still have a bigger negative, so you may think originally, okay, it's pushing down, and here we go from minus 273 to plus 233. So that confirms as well this sort of momentum we were seeing on the actual footprint candle itself. And you can see that the delta max was slightly higher, but not really. It never went into negative. So it went in negative, sorry, it was just minus 19, so very weakly. So there's clearly momentum in here. And another thing you want to see, even if you did an exit on that candle, when we move to the next candle, apart from the fact it's an up candle, apart from the fact it's a green candle, apart from the fact that you can see some buyers even more stepping in, and sellers are trying but are being absorbed. We'll see I'll have a positive delta, and within that positive delta we can see volume increasing as well, which is something else that should give you indications. And you can see here I've got the volume per second. Normally we point something when it's slow, when it's agitated in 1.9, 1.2, 2.7, 2.9, and we can see this, we're moving to, again, this 1918, which is quite fast, 159 from 249, so that clearly is. The speed is, volume is being generated at speed, so there is momentum, there is speed. All right. And you can see it goes even higher. Then you've got a 216, which is still great, and 476, 3. I mean, it's going up and up, and the volume is increasing. And at this stage, that's when you see that we've got this negative delta coming in, completely being absorbed. So this, all this, that's what we were seeing in the candle originally. All this negative delta, all these aggressive sellers are being absorbed, and the market keeps going up. And here, as I said, this could be a combination of stops being triggered, i.e. people taking profits, or initiatives, so new sellers coming in, but who, in order to be executed, need liquidity. And they're coming in when there's a move, because when there's a move, it's a combination of obviously aggressive buyers at market, but also, as we can see, there's quite a lot of movement on the. When I say movement, it's quite a lot of momentum and size still on the sellers. They're just being absorbed, so it keeps moving up, but it's still loads of sellers, you can see here. And in order to have all these sellers, you need to have all these buyers on the ask. On the bid, on the book. Sorry, in terms of resting orders. So really, that sort of indicates that there is still a number of people buying both, at the ask and at the bid, in terms of limits and also in terms of market orders. So if we were to want to slice an order, large orders, if you're an institutional and you've got size, you need liquidity, and it's much better to sell in a rising market or to buy in a down market where there is liquidity and momentum and volume, as it is the case here, than do it when there's absolutely nothing. So again, very often, and that's true, very true for the 6E, this very, very happens a lot. I don't know if it's the case for all the assets, but certainly it does happen a lot. Doesn't prevent the market from the prices from moving further up, as you can tell. Certainly doesn't stop them, because there is absorption and there's aggressivity and so on. But of course, then you come to the point that it's the end of the day, end of the session, end of the week. So things sort of calm down, and you've got this sort of consolidation and accumulation, whatever you want to call it, which we saw earlier. Because we had this sort of strong down, I would watch on Monday, not necessarily at the open. At the open of London, I would wait probably a good hour and see what's happening. I wouldn't necessarily trade the Euro session open. I would wait for the London Open and be within a good hour within it, maybe a couple of hours. But I would expect, and we will know that on Monday, but I would expect maybe a move down following this for all these reasons. So I hope you found this helpful. If you managed to watch it all the way here, really I can tell that I can see that this might be a bit painful to watch and listen to somebody for an hour. I'm just trying to share the thoughts that you have on a sort of trying to replicate the sort of thoughts you may have on a live situation as you trade, which obviously is why I'm trying to dive back in the heat of the of the moment and project ourselves back, cast ourselves back on Friday 11 a.m. But I guess what I really want to show you here is the sort of thought process that you would have and the various elements you would look at. Obviously, you need to understand more about the footprint, behavior of your assets, and all the rest of it. There's all these different elements that I brought in. There's a lot of other things to do with the openings, with the close, with the time of things, with the TPO, with the volume profile, with the footprint. And there's a lot more to do as well on the order book side, which will only come and confirm all of this, because you would see the other side of all these trades. Obviously, I can't show that to you now. I could do a replay, but it would have been a bit complicated. But what I will do, I will try to do a session. That's part one. I will do a session on the order book session, which will show you the other side of all of this. Obviously, I won't be on the same time period, but it doesn't matter. It's it's still I'll focus the next session on the other book, on the Don. So I hope you enjoy this. Please don't hesitate to ask questions and comment and so on. The idea is to exchange and bring value. And I wish you a good Sunday and keep safe.